I'm 87 years old, and I lost $800,000 chasing one stock. Not in a crash, not in a scam. I chose it. I added to it. I defended it. I watched it fall, and I refused to step away. What troubles me now isn't just the money, it's how much of my attention, my energy, and my last strong years I handed over to a blinking price on a screen. I worked for 42 years as a mechanical engineer. I started in 1968 at a small manufacturing plant in Ohio, drafting tables, grease on the floor, loud presses running all day. I learned to measure twice and cut once. I learned to check assumptions. I moved up slowly. Project engineer, the manager. Then senior project manager. People came to me when something wasn't working. I liked being the steady one. I liked being right. At home, I handled the finances. My wife handled everything else. She trusted me without question. If I said we were fine, she believed me. We lived simply, 3-bedroom house, one car at a time. Road trips, not resorts. We saved every month, no matter what. By the time I retired at 67, we had about $1.6 million. No debt, the house paid off. 2 kids are grown and stable. It was enough. Retirement felt good for a while. I fixed things around the house, cleaned out the garage, took morning walks with my wife. But after the first year, the quiet started to bother me. No meetings, no deadlines. No one is asking for my judgment. I didn't realize how much of my identity was tied to being needed. So I leaned harder into investing. I had always managed our portfolio, mostly index funds and dividend stocks. Boring, steady, it worked. But now I had time. I read earnings reports line by line. I watched financial news every afternoon. I updated spreadsheets even when nothing had changed. It gave my day structure. The market opened at 9:30 and closed at 4. There was movement. There was a scoreboard. My wife would sit across from me at the kitchen table, reading a novel. Sometimes she'd ask what I was looking at. I'd start explaining margins and growth projections. She would nod, polite but uninterested. I didn't notice I was talking more to myself than to her. I wasn't just tracking numbers. I was trying to prove I still had an edge. That's when I found the stock, a clean energy battery company. Big promises, government interest, the kind of business that sounded like the future. I told myself I understood the technology. I read the quarterly filings twice. I listened to every conference call. The more I read, the more confident I felt. The stock was trading at $42 when I bought my first shares. I put in $200,000, a large position, but I told myself it was manageable within months. It rose to $58. I remember the exact morning it crossed that price. I refreshed the page and saw green. I felt sharp again, relevant, like retirement hadn't dulled me. At Thanksgiving that year, I mentioned it to my son. He listened and said carefully, "Dad, maybe take some profit." I smiled and said I had a long-term plan. I believed I did. I believed experience protected me. It didn't. When the stock pulled back to $50, I didn't see risk. I saw an opportunity. I told myself the drop was temporary, just normal volatility. I moved another $300,000 into it. I explained it in neat terms, lowering my average cost, increasing long-term upside. It sounded disciplined. It sounded intelligent. A few months later, it dipped again. I added another $300,000. That brought my total to $800,000 in a single company, almost half of everything we had built over 4 decades. If someone had described that situation to me years earlier, I would have called it irresponsible. Concentration risk, overexposure, basic portfolio management rules broken. But when it was my decision, it felt different. The company began missing projections. First, it was a small delay in product rollout, then supply chain issues, then revised revenue guidance. The language in earnings calls shifted from confident to cautious. Analysts started lowering price targets. I noticed all of it. I just explained it away. I told myself innovation takes time. I told myself the market was impatient. I told myself this was when real investors stayed strong. The stock slid to $35. I watched it daily. Then it fell to $22. Friends from my old firm called and asked if I was still holding. I said yes. I said I believed in the long-term story. What I didn't say was that I was checking the price constantly, before breakfast, after lunch, during dinner, sometimes at 2 a.m. I would wake up and walk quietly into the kitchen. I'd open the laptop and stare at the chart in the dark. My wife would call from the bedroom, "Are you coming back?" I'd answer, "Just a minute." That minute often stretched much longer. I stopped going on morning walks with her. I skipped small outings when she talked about family plans. I half listened. My mind was running scenarios. If it rebounds to $40, I'll reduce. If it hits $60 again, I'll trim half. I was planning exits that never came. When it dropped below $10, I felt a tightness in my chest. But selling felt impossible. Selling would make the loss real. As long as I held, I could tell myself it was temporary. At $6, I bought more. Not a large amount compared to the rest, but enough to prove I had lost perspective. I wasn't investing at that point. I was defending my identity. Then came the restructuring announcement. The company couldn't meet its debt obligations. Shares collapsed almost overnight. Trading became chaotic. Analysts stopped talking about growth and started talking about survival. By the time I finally sold, my $800,000 position was worth less than $40,000. I remember sitting at the kitchen table staring at the confirmation screen. My hands were steady. My face felt hot. I wasn't shocked. I had seen it coming in slow motion. What I felt was something heavier. I had ignored every warning sign. Telling my wife was harder than seeing the number. She didn't raise her voice. She didn't accuse me. She just sat quietly and said, "We'll adjust." That quiet acceptance felt worse than anger. We canceled our planned trip to Italy. We decided against the retirement community we had toured and moved into a smaller apartment. We cut back on expenses we once considered modest. I told friends it was a lifestyle choice. It wasn't. It was a consequence. And I had chosen it 2 years later. My wife became ill. Hospital visits became routine. Long hallways, fluorescent lights, waiting rooms that smelled like antiseptic. I sat beside her bed more than once and thought about the nights I spent watching a stock price instead of sitting beside her when she was still strong. That thought stayed with me, and it still does. My wife passed away when I was 84. The apartment became very quiet after that. You don't notice how much sound another person makes until it's gone. The way they move in the kitchen, the way they clear their throat before speaking, the soft background noise of the television when they're half watching it now. I hear the refrigerator switch on. I hear my own footsteps. I hear the clock. The silence is steady. It doesn't argue, it doesn't comfort either. After she passed, my son came over one afternoon with a folder in his laptop. He said we should reorganize what was left of my investments. We sat at the small dining table. He spoke carefully, respectfully. Diversification, income allocation, risk limits. Things I had explained to him years ago. Now he was explaining them to me. I listened, I didn't argue. That shift was harder than I expected. For decades, I was the one people relied on for financial judgment. Now, I was the example of what not to do. The loss didn't bankrupt me. I still had enough to live on, but it reduced options. It changed comfort into caution. It removed the margin for error. More than that, it forced me to look at myself honestly. I didn't lose $800,000 because I didn't understand markets. I lost it because I couldn't separate my ego from a decision. I wanted to feel sharp. I wanted to feel exceptional. At 79 years old, I still wanted to prove I could outperform. I confused activity with value. I confused risk with intelligence. And I'd ignored the most basic principle I had followed my entire career. Control what you can, limit what you can't. If you're watching this and you invest, remember something simple. No single stock deserves half your life savings. If one position grows too large, reduce it. If you feel defensive when someone questions your investment, stop and examine why. If you are checking prices in the middle of the night, something is already wrong. And if you already have enough for the life you need, protect it. There is no award for squeezing out a little more return at the cost of stability. I still invest today, but it's quiet investing, broad index funds, conservative allocations, automatic rebalancing. I don't watch financial television anymore. I don't refresh stock prices every hour. I sleep through the night. That matters more than I understood before. When I look back, the hardest part isn't the financial adjustment. It's knowing how much attention I gave to something that did not care about me at all. A stock doesn't know your name. It doesn't reward loyalty. It doesn't respect conviction. It just moves. What stays with me are the ordinary evenings I could have spent differently. Sitting beside my wife without a laptop open, listening fully when she spoke, taking walks without checking my phone afterward. Money can be rebuilt. Slowly, reputation can recover. But attention, once spent, is gone. At 87, my goals are simple. I want a steady income. I want predictable days. I want to answer the phone when my granddaughter calls. I want to sit in a quiet room without feeling the urge to check a screen. I lost $800,000 chasing one stock, but what I truly regret is not the number. It's the time I traded away while convincing myself I was being smart. If I could change one thing, it wouldn't be the market outcome. It would be how I chose to spend those ordinary nights when I still had someone sitting beside me.